You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Adam Hamilton, CEO of ZealLLC.com. Welcome to the show, Adam.
Hey, Jim. Good to see you. Thanks so much for having me.
So many headlines about Greece, the no vote, and people trying to interpret it. Does it mean they don't want to be part of the European Union, or no, they just don't want to face austerity anymore, being forced to work past the age of 50? Pretty horrible, I guess. Anyway, but a bigger concern for you is what's happening in China and the downturn there. Yeah,
Greece is interesting, but I think China is a way bigger deal, Jim. The flagship Shanghai Composite Index in China, as of this past Friday, right before the 4th of July, it was down 28.6% in 3 weeks. Actually, just 14 trading days because China had a holiday, a Dragon Boat holiday, on the second to last Monday in June. And, you know, a 28.6% decline in a major flagship national market is just crazy. It's such a big drop. I think like $3 trillion of stock market wealth was wiped out for China. And, you know, China's economy is the second biggest in the world, but it's nowhere near as big as the United States is, I believe. And the per capita income there is something like $8,200 a year. So $3 trillion in losses for Chinese investors is a lot bigger deal than $3 trillion losses for American investors would be. And $3 trillion would be huge here. I mean, just it's a colossal number. I think the S&P 500 or the U.S. stock markets, S&P 500 was worth like $20 trillion recently. But anyway. So this is a big, big deal, and the Chinese government is just panicking. They don't know what to do. The government had been encouraging people to buy stocks in China for the 6 or 7 months before it topped in early June. The Shanghai Comp's up 111%. All the way up, the Chinese government was telling people, buy stocks, it's patriotic, make money, help the country, retire younger. There were just all these messages from the government about buying stocks. Now the government's just panicking, and they've been doing all kinds of crazy things. Like this past Wednesday, apparently the People's Bank of China, their central bank, made a rule that brokerages can accept houses, like real estate, for collateral and margin trades. So if you want to borrow money to buy stocks in China, now you can do it on your house. Can you imagine that, putting your primary residence up for a margin trade? And of course, you double your risk in a margin trade. I believe in China it's 50%. You have to have 50% maintenance margin, just like in the U.S. So the risk is doubled. So if you have a stock market that falls 10% and you're fully leveraged, you lose 20%. I mean, just imagine people losing their houses in China if the stock markets keep turning south. But after 111% rise in 6.5 months, the decline's going to be symmetrical. It was a parabolic surge, a popular speculative mania. And just this past weekend, it got even crazier. The People's Bank of China decided that it was going to inject money into a state-owned Chinese company to buy stocks directly. It kind of convinced the Chinese brokers to spend $19 billion in stock purchases this morning. To prop up the stock market. Now, $19 billion in a $7 trillion market is trivial, but it did create some euphoria this morning, Monday morning. The Chinese stock market shot up like 8% in open, but they sold off towards the close. They're only up 2.5% in close. They're still down like 26% or so over the past several weeks. This is a big deal. I think the Chinese government's really scared, Jim, because they're worried about social unrest. Something like 85% of the stock transactions in China are retail investors. And you and I have talked about before how these are mostly uneducated. Like, I forgot the numbers, or something like 2/3 of the new investors had a junior high education or less. And they were buying stocks. They never bought stocks before. They were buying on margin. They were putting their life savings into the stock markets. And, Chinese people might even be losing confidence in their government over the government's inability to stop the stock market slide. It is a huge, huge deal. And I'm just flabbergasted, shocked, just astounded that it hasn't really spilled into the global markets yet. But I think it will. I think it's a really big deal that has big potential to pull down the global stock markets once people realize the ramifications of this Chinese bubble popping.
Well, I've heard every revolution starts with the middle class, and the Chinese have invented a middle class that didn't exist 10 years ago.
Oh, that's a great point, and they're just going to get wiped out in this thing. It's just crazy. It's so hard to understand. When we studied the markets for a while, like a lot of your listeners have, like you have, like I have, you know when things go up 100% in 6 months, there's a problem. You know when people are borrowing money to buy stuff, there's a problem that's not sustainable. But these Chinese people didn't understand this, and once again, putting their life savings into the markets, having the government tell them now that they can borrow against their house to put in the stock markets, it's just going to end really badly for so many people, and their confidence is going to be destroyed for a long time in the government, and who knows what social, economic, governmental ramifications that has. I also think it's bullish for gold, Jim. As you know, the Chinese people have a deep cultural affinity for gold. They've always loved it. And I think they got pulled away from that in the first 6 months of this year when the Chinese stock markets were soaring. on the central bank rate cuts and just all the government cajoling to get into stocks. I think the Chinese people will come back to gold. They'll say, hey, I lost 30, 40, 50, 60% in the stock market, so I'm going to put the rest of my savings into gold. At least I'll have that. I can, have it in my fist. I can hide it in my house. Gold's been good for my parents, my grandparents. It's been good for thousands of years. Why do I want to own these stocks that can collapse 30% in 3 weeks when I can own gold, which, it just rises slightly over time, pretty much indefinitely. And so it's really crazy. Just an amazing situation there. Just totally unprecedented in some ways.
And it doesn't help, too, that anywhere between 20 and 40% of the firms listed on their stock exchange are scams.
Oh, my gosh, that's insane. There's definitely a different, I don't know if I want to say morality, but just perception of what's acceptable to make money. I know there's scam artists here in Canada and America, but it seems like it's just kind of a national art in China. The whole fraud thing, the whole copying thing, just the false pretense thing. It's really sad. Interestingly, this is kind of related to those notes. Apparently, there's a quarter of the listed companies in the major Chinese stock exchanges, like Shanghai and Shenzhen, have applied to the government to just suspend trading. The volatility is so extreme, they just want people to not be able to trade their stocks. And I'm sure I suspect most of the quarter aren't scams, but maybe some are. It's just interesting that in the global stock markets you can buy whenever you want, but when you want to sell, the governments won't let you out. Same with Greece. They closed their stock markets down last week. They've been closed for over a week now. It's like a roach motel. You can get in and you can't get out. And I just think investors around the world should remember that, when they're buying high, that you might not have the ability to sell when you want to. And when the markets finally open, they could be gapped down, 10, 15, 20, 30%. And you take a loss regardless if you have stop losses or not. It's really scary to buy high when there's so much economic turmoil in the world.
Adam, why do people do that? Everybody knows the saying, buy low, sell high. And yet, I would say 80% do the exact opposite.
Yeah, it's a great question. It's something I've studied most of my life, Jim. I think it's emotion. It's greed and fear. And it's also, there's a social acceptance component to it. In order to buy low, you have to hate the thing you're buying. You have to feel bad about it. I've made north of 700 trades through my newsletters. These are public trades on the record, the buys, the sells, many more personally, of course, over the years. But my best trades out of all those, I track all this extensively, is the ones where I just feel like almost physically sick when I'm buying. Like I look at the capital I'm putting in this stock and I just feel bad. It's so low. It looks like it's going to go down forever. Everybody hates the sector. But in order to buy low, you have to buy things that are despised and out of favor, and that's just socially unacceptable. You can't tell your friends you're buying something that's deeply out of favor. They'll think you're an idiot. You can't tell, even your wife will think you're crazy sometimes when you're buying stuff that everybody just hates. But to buy low, you have to buy stuff that's socially unacceptable, it's just despised, unloved, loathed. But buying high feels good. If you're buying that hot tech stock, that IPO everybody's talking about, that cool company that makes this great gadget, it feels good. You can tell your friends about it. You feel like you're riding momentum. You're on a wave. The future looks so bright, and so people they haven't learned to battle their own hearts. I think the markets are a battle against our own hearts, our own emotions, and not each other. And it's so hard to fight your own greed and fear. Our whole lives we kind of are socialized and just that our emotions are important, and they're really not. They really betray us. They really cause lots of problems. Think of personally, like for anger, for instance, you yell at your kids, you get upset with your wife. That's such a counterproductive thing. If you could suppress that emotion, you'd do so much better. And the same with the markets. People have to get past their greed and fear. They have to learn to buy when they don't want to sell when they don't want to, and that's the only way to buy low and sell high. If you feel good when you're buying, if you feel good when you're selling, odds are you're not doing it right. It's got to be a hard, contrary thing, just kind of grading psychologically, really hard to do, and it's so hard to get to. It just requires years or decades to study the markets. You can understand how cycles work, and therefore you can use that knowledge to kind of short-circuit your inherent human emotions that will betray you every time.
We'll have more with Adam Hamilton right after this.
More and more people are looking to the Internet for intelligent, riveting, and thought-provoking interviews. To advertise on The Goddard Report and TalkDigitalNetwork.com, call 604-699-8600, 604-699-8600.
Welcome back. We're speaking with Adam Hamilton. Adam, how is the U.S. stock market doing compared to what's happening in China? Or is China just a precursor of what's going to happen in North America later on?
The U.S. stock market continues to levitate, Jim. It's so frustrating for contrarians or people who think that market cycles should still exist. There's this belief here that the Federal Reserve has short-circuited market cycles through their quantitative easing campaigns. So the U.S. stock market just grind along near highs. And so far, China hasn't sucked the U.S. stock markets in, and I think that so far is really important. A week ago on Monday, the U.S. stock markets fell 2.1%. It was on the S&P 500. That was their biggest drop of the year. I think their biggest drop in about a year. But even at that point, Jim, they're only down 3.4% from their late May high, which is trivial. It's nothing. China's down 29% last week. European markets are in correction territory, or were in correction territory per the DAX. And so the U.S. markets just have this Teflon feeling that they're immune to the sell-off, and they're not. And at some point here, all this stuff's going to catch up. Q2 earnings season is coming pretty soon here. I think it starts Wednesday with Alcoa. And we'll see how earnings are doing in the United States. And the stocks are really expensive here already. The valuations are high. And at some point, these things are going to roll over and roll over hard. Market cycles have always existed. Like the Chinese are finding out right now, even central banks can't stop market cycles. Once fear takes over, there's nothing on earth that can stop it. Greed burns itself out before that fear takes over. There's only so many people who can buy stocks, so much capital, even with central bank intervention. Eventually, all the buyers who want to buy are in, and then that leaves only sellers. And so I think it's inevitable that these global stock market problems are going to spill into the U.S. markets. But for now, they're just levitating near highs, which is frustrating for contrarians, certainly.
And also, the Greece crisis, you'd think that would prop up the price of gold. Nothing happening there. And I told you, well, it seems to me for months now, people have been poking a stick of gold, expecting it to move, and it's just laying there.
That's such a great word picture, Jim. You are just a master wordsmith. Yeah, that's exactly what's going on. It's really frustrating for contrarians as well. Gold's grinding along near lows, and a couple things that I've been keeping in mind and telling our subscribers. From early June to early July is a major seasonal ebb in gold. You go back 15 years, even decades, and gold has these seasonal tendencies. Like there's demand spikes at certain times in the year. The supply of gold is relatively constant. Mines don't change based on weather. They produce the same amount of gold year round, roughly, minus expansion, stuff like that. But anyway, but there's these demand spikes, and there's none in the summer. Like June and the first part of July are totally devoid of global demand spikes driven by cultural factors like festival season in India in the autumn. There's no income cycle factors like the end of harvest in Asia in August and September. And so gold always tends to drift between early June and early July. That's exactly what's happening this year. It's supremely frustrating given what's going on in the world. But with the U.S. stock market so high, Western demand for gold is just, down in the gutter. No one wants it because they don't believe they need to diversify their portfolios anymore. But I think once we get through this seasonal weak period, which actually is happening right about now, the first or second week in July is when gold tends to start seeing its initial surges ahead of its big autumn surges on Asian buying. And so once we get through the seasonal ebb, I'm expecting that we'll see some gold demand rise again, but it has been really frustrating. But on the other hand, it hasn't fallen. We have the dollar's still really high. The U.S. stock markets are ridiculously high. There's a lot of things that could have driven gold lower over the past several months, despite all the crises we've had in the past few weeks, and gold's hung in there, despite horrendous sentiment and everything stacked against it. So I think we're forming a really nice base here for big autumn rallies this year. The average rally between June and October, Jim, between 2001 and 2012 is like 7.5% for gold. Then there's another 10.1 seasonal rally on average between mid-October and late February. And so we're really set up for great runs here, especially if the U.S. stock markets roll over. But I think that's the key, is that as long as people think that U.S. stocks can do no wrong and they don't have to diversify their portfolios, they're not going to look to alternative investments that move contrary to stock markets, of which gold is the leader, of course. But yeah, we're just stuck in the seasonal ebb right now. Should be about through it, but it's been a miserable month for precious metals guys and contrarians, that's for sure.
Where's Bitcoin playing in here? I understand in Greece, because you couldn't get cash out of the bank, people were turning to Bitcoin.
That's interesting. I haven't followed much Bitcoin news lately. It's really fascinating, the digital currencies. I remember when Bitcoin almost had parity with gold, I don't know, several years ago or something, around 1,200, and people are like, yeah, Bitcoin's the future, Bitcoin's going up, gold's going down, and Bitcoin collapsed subsequently, and gold's right where it was back then. And but I think the Greek people are going to be disappointed by that. Digital currencies can fail. They do fail. Bitcoin's the leading one, of course, but it's just it's promises to pay. There's nothing backing it except confidence, really. It's a total supply and demand thing. It hasn't been accepted for very long. It's most merchants around the world won't accept it, and so I can see the Greece people in desperation turning to Bitcoin. But man, I really wish they'd turn to gold. They'd be a lot smarter.
Well, I was going to say Virgin will take Bitcoin to finance one of those space flights.
That might be the best use for it. Virgin got a lot of publicity on that. I remember Richard Branson being on CNBC the morning they announced that, I've followed Bitcoin over the years. I've never actually traded or dabbled in it, with my own capital, but it's certainly fascinating. But there's like a dozen currencies competing for that crown, and they're just fictional. And you wonder, I understand about blockchains and all these safeguards put in and the public record and stuff about how they're not supposed to be hackable, but anything's hackable.
But they have been hacked.
Oh, has it really?
Oh, yeah, to the tune of $100 million here and there.
Oh, stolen bitcoins. I'm talking like fabricating new ones, like creating more out of thin air than like the algorithm allows, like just like counterfeiting bitcoins, if you will, rather than just stealing them. But it seems like a really iffy proposition to me based on what other digital currencies have done. If we had a gold-backed digital currency where the gold is stored in a physical vault somewhere.
Well, there is a bit gold.
Is that physically backed by gold?
I don't know if it's physically backed, but there's bit gold out there, and it's been going up. And right now, it's relatively cheap.
That'd be pretty cool. Texas recently passed a law where they're going to do a Texas bullion depository where the government of Texas can store their gold there instead of the New York Fed. This was a couple weeks ago. And part of that was they wanted to issue debit cards on that Texan bullion depository gold. Like ordinary Texans could put their gold in there, then they could use the gold as a currency through debit cards. And so I know Texas isn't a national government, but maybe we're starting to see some moves in that direction where gold's stored and we can transact it digitally. I'd love that. I think that'd be the perfect currency. Digitally transacted, physically backed gold would just be the way to go in this modern computer era, I think.
And of course, too, if you go to Germany or Tokyo or Hong Kong, they have vending machines that will give you gold.
Nice. I've read about those. I've never actually seen one, but that's so cool. I always wonder about the security of them. In the States, they'd probably last about 5 minutes before, someone tied a chain on them and tied them to the back of their pickup truck and, banged it against a few pillars or trees to crack it open and get the gold. But
like they do with ATMs right now.
Yeah.
I mean, that's why they have, those bullards in front of banks and ATMs and liquor stores. So you can't use a stolen SUV to ram your way in anymore.
Yep, seen those all over the place down here too, no doubt about it. Yeah, it's just different cultures in the East and West. I really wish that, Americans, maybe Canadians to a lesser extent, understood the value of gold in portfolios. Everybody should have 5%, maybe up to 20% of their portfolio in physical gold bullion. You never know what's going to happen. You don't know what's going to happen with currencies or governments, and all throughout world history, gold's protected people. We all need something that moves contrary to stock markets and real estate, just some portfolio insurance, and physical gold's the best possible thing. And it is so dense, you said, and so valuable per the volume. So you can store a lot of wealth in a little bit of space, and it's too bad that in the West people have kind of lost their way on gold. I think they'll figure it out sooner or later here, but I hope it doesn't take too many crises for them to figure out that they really need gold, just a little bit to protect them when stock markets go crazy, when currencies go crazy, when governments get a little bit too aggressive or punitive. We really need gold to be restored culturally here in the West.
Adam, thanks a lot for chatting with us.
Thanks so much, Jim. Great to see you. Have a great day.
My guest has been Adam Hamilton, CEO of ZealLLC.com. His website, ZealLLC.com. You're listening to HowStreet.com radio. Find us on Twitter at Talk Digital Net. Check out our popular YouTube channel, Talk Digital Network. Comments about the show can be sent to info@HowStreet.com. If you have any questions for Adam, you can send them to the same address as well. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.